John Swain here from We Love Small Business, and Budget 2021 is out. And there's some interesting nuggets for small business owners, which I'll go over the highlights in this video. But first, to get tips like this and many more for running your small business, make sure you subscribe to our channel and hit that notification bell. You can also sign up to our video email list for hot off the press news and tips. So first off, the Canada Emergency Wage Subsidy, or the CEWS, and the Canada Emergency Rent Subsidy, the CERS, which were originally set to expire in June 2021, those will be extended to late September. The rates will begin to decline in July, so continue to check to see if you qualify. And don't just assume that just because things don't feel as bad as you were anticipating, check every month. If you don't know how, chat me in the body notes and I can give you some tools to DIY it yourself, or we'll do it for you for a modest fee. The budget also introduced the new Canada Recovery Hiring Program for eligible employers that continue to experience qualifying declines in revenue relative to before the pandemic. So, in a nutshell, businesses with revenue declines greater than 0% between June 6th and July 3rd and greater than 10% from July 4th to November 20th can apply a gradually reducing subsidy rate starting at 50% and reducing down to 20% to additional costs incurred for wages or the hiring of more staff. This will be applied to the difference between the current payroll and the baseline payroll. This is a little different from the CEWS, which is based on the total payroll multiplied by the allowable subsidy rate for the period. It will be important for businesses to run both calculations because they can take the higher of the two, just not both. So jump on this. The small business tax rate will be reduced by 4.5% and will gradually increase to normal over the next decade. The net rate is provincially dependent, but look for it starting in 2022. This will help. Now here's a cool highlight. The government will allow small business investing in capital expenditures, so think about things like equipment and machinery, not big things like building, to take a full deduction in the year purchased, as opposed to a certain percentage every year. This will be for equipment purchased and available for use between budget day and January 1st, 2024. This maxes out at $1.5 million. Now, while this sounds really cool, please do not run out and buy crap that you just don't need just to get the write-off. This is not rational. Don't be a dummy. Other highlights include increased incentives for investing in clean energy equipment, interest deductibility limits, improvements to the Canada Small Business Financing Program, just to name a few. Oh, and there was talk about working with stakeholders to reduce those darn credit card transaction fees in the future, but I'm not sure if I would hold my breath on this one. Anyway, as always, I am here for you. If you are a small business owner and want to chat about the proposed budget or anything business, book a chat. And if you're struggling and you just need someone to listen to, book a chat. I know for some of you it feels like your world is crashing in right now. You got this. Hang in there. Until next time, stay safe and profitable all at the same time.